Mic check. Mic check 1 2. Going live in 3 2 1. Let's be right back. Hey. Okay, there we go. And we are ready to jump into today's action. Moringa Exchange, let's go. Okay, so we've had a winning streak from last week, like Monday, Tuesday, Wednesday, Thursday, Friday. And then yesterday, and let's see if we can continue with that winning streak. So we have let me reduce that music just a little bit more. So we have like 24 minutes to 12. So let's do a quick review of yesterday's trade. I'll bring it down to somewhere there, and then let's just go to the 1 minute straight away. And this is what really happened here. Let me get rid of this group. So as simple as it was, yo, my guy. Okay, I'm gonna just do it like this. I don't know why my computer has been acting up, but anyway, we can just do it like this. So I was waiting for the market to either come down, get a good buy, or to come up. And now since we're here, it was a good time to take a sell. And if you go through yesterday's analysis, I said that I was bearish even when we were down here, I believe. So when we came up here, that was a perfect time for me to, like, engage with that sale. And I remember saying that this was a high probability trade because we just went above this 4-hour. Now this right here, this box where it's blue up and gray in the bottom, is a 4-hour candle that closed at 11 a.m. So what we look for this is either side to be taken. So if we take this side, then we kind of foresee the future that they now probably come to take this other side, because on both sides we have liquidity, right? So when we went out and come back into the range immediately, that is a good sign that, you know what, we can come down. So if I see my entry signal, I'm in. Now what I'm looking for is just to see a low being established, where we have a high, a low, a lower low, and a higher low. And that right there was my entry. But what happened is this one closed too fast, right? So this one had started coming down, so I didn't engage with a sell stop. I did a market order, so I just hit sell and my stop loss up here, and I even got a better entry than down here. And that was my entry right there, and the rest was history. And of course, the way we manage our trade is I take this fib from where I put my stop loss to where my original entry was. Whenever we hit 1:1, my stop loss goes to half. When we hit 1.5, my stop loss break even. 1:2, right there, I take out 80%. And then this is something that I'm currently developing, right, or kind of coming to understand, where if I'm going short, I will look on the starting from the 5-minute time frame, where we have the last down candle before the market went up. If it's a series of candles, like let's say 1 or 2 or 3, like in this case, I go to a higher time frame until I find where we only have one candle that goes down to go up. And this will be what this is a bullish order block or a demand candle. So that week becomes the goal for that setup coming down. And in this case, you can see that the goal was way down here after my 1:2. So that to me is even more delicious. So I take out 80% here for now before I get enough data to be able to hold up to here. Then when we get here, I take half of what's left and then I put my runner like all the way down here just in case the market gets animated and keeps on going down. And that was yesterday's trade. And after that, whatever happens later, I could care less. I'm in the money, I'm out. So what happened is my runner was stopped out later, and it's all good. So let's see what we have for today. And this was the previous 4-hour low. We don't, or what was it? The previous 4-hour high. So I can see we're trading above that 4-hour zone over here. So let's get rid of yesterday's shenanigans. We don't need that anymore. This is a daily imbalance. We can take it to the front, and let's go straight to the monthly time frame, see what we have over the year. Now this is what has been my suspicion. Yo, my computer is acting up now. Yo, I don't know, I deleted a lot of things, so I don't know why. Oh, this could be maybe the setting that I chose with my this record OBS. So maybe that's why I put the latency setting on low, which should be able to give my viewers like a near what do I say, like the delay is too small. But anyway, okay, so looking at these levels, I can see that we've, oh my god, how will we operate like this? We can see that we've traded above the old daily high. We've gone above this level that we've had them there from last week. I think I added like 2 yesterday, but these are high time frame levels that we've traded above, which is good. So let's go down to, so the next point where I think we're getting to on a higher time frame, on a monthly time frame, is this open price here for this down candle. Or if we start retracing, then we have this level here, which I think is where we are heading to as we speak. We have this one here and this one. Let's go to the weekly time frame and we'll see those levels properly. So this is the current weekly candle. You tried to get up here, but that's the most they've done, and so we're retracing back. So currently this is where we are. So we either come and revisit this level, or we come down to this level over here. On a lower time frame, that is enough pips to make our target for the day, and I don't think we have any level to add. The other thing that I see we don't have is this is the previous week. I think it's locked. I didn't mark that. That's the previous week high. And what I want to do, oh my god, tungangane tuna hali ilivyo. Okay, I'll just have both of those levels there, but this is the most important one, the previous week high, which I'm thinking then we don't need this, but okay, I'll just have them there. And then, oh my god, the previous week low, which one now? Okay, that's not important because it's gonna be all the way down here, and we have a lot of levels to go to. And then we do have this gap here, which is now established. So let's mark it, and my computer is really acting up. So I'm gonna mark that weekly, that imbalance that's on the weekly time frame, and that could be a target that we can work towards getting to. So it's a volume imbalance. Oh my god. Oh wait. It's a weekly volume imbalance, or I can just call it a weekly imbalance. So I think I'm gonna change to just weekly volume imbalance, and I'll have that in capital letters. Weekly volume imbalance. So I'm changing that from just imbalance to volume imbalance, which is still the same, but it's much shorter. and I'll have that in blue. I think the problem is the setting that I have for this streaming software. Well, tomorrow might have to change it. And I think that's it on the weekly time frame. I think we have the levels that we need. Now let's see what we have on the daily. And let's go to the daily time frame. And we have quite a bit here. This is already worked. My God, look at this. See this week over here? See a half of it. Do you really think it's a coincidence that this week comes and stops right there at the half of this week? I don't think so. It's not a coincidence. Half of those weeks are PD arrays. So do we need this? Yeah. I'm gonna pull it to the front because it offered support for this candle. So we do expect some sort of resistance of support when we get there. And then we have this fair value gap here on the daily time frame. Oh my God. Just bear with me. So that's a oh wow. Daily. Is the stream lagging on your side? Let me know if it's lagging on your side. So okay, we need to do some things. I think this imbalance was on the weekly time frame. Where is it? Hey, my God, how will we continue like this? What's the problem? Was it this one? Daily imbalance. Okay. This is slowing me down. Wait, I did mark this imbalance, right? What happened? Oh, okay. So this goes in the weekly pool. That's done. And then this one, we did it on the daily, goes to the daily pool. And this is not good, but we'll still get the work done. Wow. Maybe we're using too many resources for my internet. Anyway, let's keep going. There we go. So looking on the daily, I can see that, oh my God, we're trading above the previous day high, and that's good. I do have an indicator that will show me all that right there. So we are getting some shortages on today's streaming. So we are trading above yesterday's high, and we tried to take yesterday's low, but we were not able. So we are bullish. We are so bullish. So monthly bullish, weekly bullish, daily bullish, and we have all the levels that we need. This is the previous week high. This is that all daily high. This is that week on the weekly, the half of the week, and the previous day high. So those are levels that we can work with on today's setup if we do find any. And now let's go. I don't think there's anything else to mark here. So that low and that low and that low, those are levels. By the time we get there, we'll have enough of what we need. Looking at the 4-hour, I like this. I like this down candle before we went up. So we're going to mark that for the 4-hour time frame. And that is, wow. It's gonna be a problem. So it's 4-hour down candle before it went up, 4-hour demand, 4-hour supply, whatever you want to call it. And then we also have this that gap over there on the 4-hour time frame that we have to mark just in case they decide they want to come down. That's an area the market can come and find support and go back up. So I think that's it. We do have a gap there, but it's not established until this 4-hour candle closes. But for now, I can see that this is the level that we are going up to as we speak. So on the way down, if we do get a setup, we have this level, that 4-hour imbalance right there, and the 4-hour down candle, the open price. So that's done. Looking at the 1 hour, I think we're done now. 1 hour, we also have to know, oh my god, this right here, because we went up and then we're seeing this abrupt market going to the downside. This up candle can, and then you see we also have like a fair value gap over there. So I'm only going to mark that that open price for that supply, for that 1 hour supply, and then we're gonna call it, oh, that's a 1 hour bearish order block, 1 hour supply. So we'll see if we can get some resistance in here. And so this is this week, and this is pretty much like that half point of this week, right? And we can see that on the 1 hour it has a lot more detail. So I think that's it. Let's see what the 30-minute has. What's on the 30 minutes? We have that imbalance over there, which I do believe when we go to the 5-minute time frame, that imbalance will be taken care of. My good lord, I am not. We have this volume imbalance over here, and that is a 30-minute volume imbalance. That's it. So we'll see if we can come in here, get some resistance to go down. If we do get an entry to come to this zone, then even better, because we can get in sync with this bearish move that we're seeing. So 15-minute, what do we have? A lot. I don't usually mark everything, but we can see that we have this up candle that went down, so we can have that one at the back of our minds. I don't need to mark that. And then let's go to the 5 minutes, and now this is to me the most important, that 5-minute fair value gap. If you look at my streams, you can see like these areas do provide a lot of support and resistance. Now, so I'll still leave this here, but I'll favor the market coming up to here. Now, see how we don't have any imbalance over here on the 5-minute. If the market does close up here, then this is a walk in the park. It either holds price strongly or it breaks just like that. And if we break this high, this is the next level that we are coming to. But I'm seeing as if we can get some sort of resistance here and then shoot down. And looking at this, we do have this 5-minute gap here, which can be a quick place to take off our short position on our way down. And that's it. Now we go down to the 1 minute and we wait for our setup to form, taking this all the way to 1 p.m. and that's it. So these are the levels that I'm currently looking at. This one is extreme, and then this one, if we do come down, then I believe we have this one here and this one and this one that we can see the market trade to. Otherwise, from now, what I do is I go take this indicator that will show me the previous 4-hour. There we go. And that will let me know where we are in terms of premium and discounts. So I can tell you for now, I'm only looking for sales. Oh my God. And do I have to draw this? I don't have to, but I can still draw it because I can see what's really happening. This was the manipulation part. This is the consolidation part. If you know that logic, there we go. So consolidation, manipulation, this distribution or expansion or whatever, it is logical for them to retrace to the optimal trade entry area, or like 3/4 of this move from a low here to that high, and then they expand to the upside. Now, looking at this, now let me get rid of that indicator. It has served its purpose. Thank you so much. Ooh, we are having a problem here. Let me get rid of this once we put it. So looking at this is what I would like to see us to get here, and we don't have to come up here. And then when we get an entry, we will be taking it down to this zone, where in the discount zone, we do have this 5-minute fair value gap over here. And pretty much that's it. Or come down to discount, get an entry, and then now push to this zone and maybe even this high. That's it. So now we head on straight to the 1 minute and wait for that entry. And 12 is just here, and let's see how that goes. And then I'll pull up this indicator. All this does is it shows me the previous 30-minute ranges. So for example, this is the 10:30 to 11 p.m. candle, the 11 to 12 to 11:30 a.m. candle AM, and then 11:30 a.m. to 12 p.m. It's just about to close in 3 minutes, and then we'll have a new range that we can use to model our entry. So this is actually perfect if it closes and then comes up to this zone and then gets rejected and comes back into that previous 30-minute range while we are still in the premium zone. There can be a good sell that we can capitalize on and go down, take advantage of. And that's it. Now we wait, and we do this every day. Now if I was here at 11:30, this right here was a beautiful entry. With we are in the discount, meaning good place to buy. We've traded below this 30-minute range, and then we go back inside the range. Now would I have taken this one? Because I'm also looking at this 30-minute range at the premium and discount, and I can see this high. We are in a discount zone, so maybe I would have taken it, but with a smaller risk, like maybe half the risk of what I would have normally used, and that entry would be looking something like that. And right there, did that give us 1:2? Yes, that gave us 1:2. So 80% would be off right there as we speak, and would have already broken even. So that would have been a win. This one here would have been a loss because it meets the criteria. Traded below that low, the high is right there. So that would have been my entry, and it didn't do so much. Came down, went up a little bit, and then came. Would have taken us out over there. That would have been a 1% loss, but it's all good. So it's now what we're waiting for, this one to close, and then we'll have our new range, which will be this high and this low. So yes, there we go. The new range has been established. So we are waiting for price to either come and take out this high and then come back into the range, and then we take a sell to come down, or they come down, take this low, and then come back in the range we're going to buy. Or we can stay in here, and then we can use the 12 to 1230 range to model our entry. Until then, we stay put. I'm not doing anything. So now it's chilling. To give you a visual of what I'm expecting before I enter, it'll come up here. It would be better if we come to this imbalance, or even come all the way down here, and then they give me a low of some sort. That low right there is my entry, and we can aim to this zone. Let me take this call. Hello. Fake calls, man. Hi, this is Sarah with healthcare benefits. How you doing today? Boy, the way I'm doing is none of your... Thanks for asking, but we know you're not real. Oh yeah, that music is too low. Let me bump it up a little bit. Now we just wait for our setup to come to us. We have grown from chasing price. We have to see what we want to see. Until then, we do not engage. If the session ends without us seeing a setup, so be it. Not taking a loss is winning. Now I'm telling you, before, now because I'm seeing a fair value gap in an order block, that right there, I'll be in. My God. Fair value gap, we've entered, rejection, oh man, I'm in. Stop loss up here. Let's go. I want 1:50. Then I start praying. Father, 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 let it go my way, please. Oh my God, it's just growth in everything. Father, please let it go my way. Wait, do I still pray? Yeah. Once you hit that sell or buy button, that's it. It's now up to the market. But you keep on adjusting and making your probability better all as you advance. Could this be a win? Yeah, but I don't know, because we've taken this high, so we've taken liquidity, we've gone up. I'm saying this one is a swing failure. Then we've broken that low, so that means we should go down. But then again, I don't know. I prefer when if we can bounce off a higher time frame level, it offers some whatever. So let's see. I was in this trade virtually. Now I can tell you for sure that we will likely come at least to this down candle, but then that is just one. I want 1:50, so I cannot take profit. I cannot even reduce my risk because I need to give this trade breathing room. So it goes 1:2, comes back, takes me out, and I'm like, oh, growing bath pains, or what do you call them? But then again, I'm telling you, every loss is a lesson. Every loss is a lesson. It's a building block. You know what? Let me stop messing with my head. Oh, okay. Let's see what the brothers are doing. US500 do have a 5-minute fair value gap here, and we also have a 5-minute fair value gap, which is this one that we've already drawn. So, but the way it's hanging, I don't know if I'll be able to check all three. So I'm gonna be downloading some more music. So I have until 30th. So today is the 28th, 2 more days. I have this source. The link is in the description where I get this copyright beats. Because I'm on the free tier, or how do you call it? TIER. I can only get 3 beats in a month. So next month we're gonna have some more music, some different music to listen to. I see we are going down, meaning that setup, that virtual setup would be in the money. Okay, this fair value gap is this one, and if I go to the 5 minutes, it's that one right there. See how these three kind of print the same way? And US500 right now is looking quite the same as this one. See this down kind of before it went up, the same one here. So we'll see what they will be doing with that one right there. I don't use this as a basis for me entering a trade, but I'll use it to gauge the probability of a trade that I enter. So if like I see long setup and then they've traded to like this 5-minute fair value gap, that one gives me some more hope that it's likely to work, because this right here can act as a strong support area. After seeing there's no more there's no inefficiency down here, so it makes sense that they're coming here and then they shoot up towards an area like this imbalance over here, where we have 2 right there, and then we have another one up here just next to it. So that is what I'm expecting. They come here and then shoot up. If we don't see that, then so be it. This one has a couple of them on this leg. So let me just mark them so we can stay in perspective. I'll mark all of them. So we can just go deleting after we are done. After they're filled, we delete. After they're filled, we delete. This means that there was a great momentum for sending price to the downside. So whenever I see this, it's usually also an indication that we are bearish. Normally, they don't have to come and fill them. So in case we cross this low, then that's a high indication. If this fair value gap, this gap doesn't hold and we just keep on going down, it's a high indication that we are very much bearish. That is something that I'm coming to note. So before, whenever I see so many gaps like this, let me pull up this whatever US500. Whenever I see so many gaps like this, and then it gives me a short setup where my stop loss can be up here, I was shying away, because then I was thinking to myself that there's a high probability that they'll come up here. But looking at price more and more, if you do get a short entry and your stop loss is here, take it, because most of the times this will usually act as breakaway gaps, and it will usually just go down and then come and take this much later. So that is something to note. Otherwise, there's a high probability that they'll come in here and then come to attack this. But if they keep on going down and then there's a setup over here that requires me to go short, then I'm gonna take it and I'll have my stop loss above the high, believing that they don't have to come here right now. Otherwise, because this shows that they're in a hurry to go somewhere. and come and take care of that those spots later. So the previous day low is right there. Previous day EQ is what they're working. This one is also working at the previous day EQ. This one is working the previous day high. The previous day EQ is way down here. So US30, as you can see, is not willing to go down deeper. So that setup, if I took it, was somewhere here. My stop loss up here. That would have given me 1:4.7, but believe you me, I would still be in this trade holding, waiting for more. But now, if I was to take that trade, when we go down to this down candle, I would have paid myself something, and then my stop would be here. If it takes me out, it's all good because I know that that was not a high probability entry. We are within, what do I say? We're within this internal range, liquidity internal. We're within the previous 30-minute range, so we can see a lot of consolidation in here. So it becomes high probability if we trade outside of that range, come in, or they want to keep on going up. It's all good. Guys, let's see, 12:15. Another thing about that setup is maybe you can also hold until one of these ones touches that 5-minute fair value gap, of which I can see US100 is heading over there. So I'm suspecting that we will get a trade after 12:30 when they establish whatever range, because I'm thinking that we could be bullish. Looking at this, come in here, there's no inefficiency, and there's a couple of inefficiencies up here. Come down to shoot up. So whatever range that we get with a 12 to 12:30 candle, if they do take the low of that range and then come back inside the range, that would be amazing. Oh, we do have another 5-minute fair value gap here. We also have to have that in. Let me pull it up to 12:30. We'll extend it if need to be. High time frame levels, we have this one. You can see how we are getting resistance over there, right, on a smaller time frame. If I was to go back to scalping, this is where I would be taking my sales from. Sell, in, out, in, out, in, out, because that's how I began trading. I would see a lot of money, but I was not able to take profit. I don't know what was happening. I wanted to turn scalps to swings because I was using big lots. See money, not take profits. Yeah. We still grow. We are growing. We have grown too far though. So if I was to go back to scalping, these are areas where I'll be taking sales. Those indicators that are filling my screen. Red, MACD red, RSI red, and some other indicators in. Get out. Yeah, but for now, let's focus on this. Mm. 12:15. So as you can see right now, the order flow is bearish. How you know that is we can see up candles are supporting price. So price is trading to the bullish candles and then going down. So this one has traded to this one going down. This one has traded to these up candles going down. Now we have this up candle to the fair value gap. I'm suspecting we can see the same thing. So trade up here and go down, meaning that's virtual entry will be in the money as we speak. Let me see. That would have given us 2 right there. So that would have been a win. Would. But if I took it and then it failed, I would blame myself. I'll be like, yo, you didn't follow your rules, so let it go. If US100 closes below here and they keep on going down, then we are bearish. We don't have to come back up. But if this creates support and we start seeing, rejections to the upside, then a high probability we can come up to here. So as of now, this 12 to 12:30 is not doing anything for us. So let's keep waiting. Wait a minute, this is wrong. No, my guy. It's only 5 minute value up. And then we have this down candle here, that open price. I don't want to mark it, but anyway, let's just do it. That's an area we can see some rejection to the upside. That's a 5 minute demand candle or 5 minute order block. This is where trading gets boring. But we just have to wait. Oh man, when that patience pays, oh my god, our feeling is good. Now, can we see market enter here and then keep on going down? I don't know. We'll see. The fair value gap paired with that inception order block. Reason why I'm calling it inception, because it's an up candle embedded. It's inside another up candle, and that is something that I'm also kind of looking into, but it's not really needed. But I think I have something marked for that. Inception order block. There you go. So what I've noticed with such order blocks where it's an up candle inside another up candle, when the market gets there, see this push to the downside, it acts like a propulsion order block. So this right here is, yes, we are on the 1 minute. Can be like a great push to the downside. So if I was, in a hurry, I can model that trade like that above this high and then see if we can go down further, but seems like they don't want to come there. So now we are in the discount. Now all what we look for is buys. So only 10 minutes to the 12 to 12:30 candle. If I go to the 30-minute time frame, this candle right here is what I'm waiting for it to close. So if we go to the 1 hour, we did have, wow, I'm really favoring us coming here, right? This is another concept that I used to look at when trading a 5-minute candle. So if I take this back, let me show you. Let me get rid of all that noise. Show you something real quick. We're not taking a trade anyway until 12:30. If I was to take this back, not that one. See how this candle traded below this up candle? The way it closed below, it now confirms this up candle as an order block, right? Or a supply candle. What this shows is someone was selling when this candle was going up. So when it closed, you see this candle going down. Now, when you go to a lower time frame, you will be looking for a fair value gap, the first one that you see. So if I didn't see one on the 30-minute, I would look for one on the 15-minute. So right there on the 30-minute time frame, that becomes an important zone, and it's a good thing that we do have that area marked. So it's really supposed to be from the low of this candle to the high of this one, but we already have that. Actually, it's a 30-minute imbalance. So I like that. With imbalances, you want to mark from the body to the body, not the wicks. So this is a very, very high probability that trade will come here. So if we do get a long setup, then we'll be taking off a huge chunk over there if we'll not have gotten to 1:2. And going back to the 1 minute. Wow. We shot to the downside. Wow. That would have been a good setup right there. Would have been one of those lucky days. 1:4. Wow. But that was not in my entry criteria, so we let it go. Now, looking at this 5-minute, we've traded down. So what I usually do is I just get rid of that level, right? Because it's now noise. We've completely closed it. It would have been good if the next 5-minute we trade down and up, but for me that's okay. And those levels are over and done with, and we can look for new levels. This is really good. There's no inefficiency. Maybe there's a small one here, but if we do start coming up, then this right here is a walk in the park. And I'll be looking to see if we can get to that 30-minute volume imbalance, which there's also an imbalance right there on the 5 minutes. So this is a very nice area to look into getting a setup, but will they give us a setup? I don't know. So we have this level here. Sorry about the sound, I don't know what's up. We do have this 4-hour, but then again, does that count? Because this one has not closed. So why do I have that level there? It's not confirmed. Because this is the current candle, so that doesn't work. 1 hour. Okay, let me bring back. There could be something there on the 1 hour. There's nothing. Yeah, oh my god. I mean, we have this up candle, but yeah, that would work. Go back to the 1 minute and let's see what we're getting. So right now, currently we have a bearish order flow. That one has been filled completely. Now, what next? Let me bring this back. What is next? We've traded into that old daily high and the previous week high and immediately rejected, going back into that range that it just established. I don't have like high time frame levels for these guys, so it's all good. But I did say if we do close below this fair value gap, then we can keep on being bearish, where we don't have to come back to these inefficiencies right now. So okay, 4 more minutes to the closure of this range. We are in the discount zone, so we are looking for buys and we are trading inside the range of the previous 4-hour. So we went up and immediately came back down, so this could be a danger where we can see a lot of consolidation. That is why we do have our trade management, which will help us in times of consolidation. Now, we do have this fair value gap here, which is what I'm seeing, but it's under 1 minute, which is what I'm seeing that we are getting support of from 3 more minutes. At this point, guys, I can't tell you if we'll go up or down, and this is just why you have to have a system that you can just follow, because if it's about following your intuition, my intuition today would have worked, but because that would have been my sell. But when you take a big like a good number of trades, your intuition, I don't think it will work for you. But when you have like a written set of rules that you follow in a in a good number of trades, it ends up working for you. Am I stammering too much? Go listen to Elon Musk. Geniuses talk like this. Okay, see how we've gone to this like up candle over here, like the green candle, which was a bullish candle, and now we're going down. So an indication of a bearish order flow. But now we're seeing support now on down candle. See, this down candle has formed support right here for these two candles, and we're pushing to the upside. Oh man, if I go back to scalping, I'm telling you, I'll kill this game. But I am not changing my system. That is what will keep a beginner going round and round. Changing systems all the time. You have to get married to one and just stick with it and look to improve it. Look at this. There's a fair value gap here. 12:30, so this range has closed. I'm not really worried with any of this internal liquidity stuff, but just for fun. So now we either take this high to come down, or I would like us to come down, take this low, and then shoot up. That to me would be good. The problem with that is if we are bearish, where this is how much they wanted to go into the premium level of this previous 4-hour, then we can be trying to buy against a bearish move. But if we take 2 losses, then that means the order flow is bearish. So we can switch, or just adjust. But with the current system I have, the most loss I can take in a day is 1.75%. So that means 3 losses, right? So 1% we lose. I go again, I'm gonna be risking 0.5, which is half of that. And if I lose, I risk half of 0.5, which the total will be 1.75%. That's the most that I'm willing to take in a day. Before I did say 3.75, but I don't know, that one kind of costs you, because when you lose all this and then the following day you're profitable, yeah, it kind of bites into your profit. So I mean, whatever it is you want to do, for me I've reduced it to 1.75% a day for now. Okay, let's keep on going down now. Bullish PDRs are failing. For example, this is a bullish what do I say, we're supposed to hold price to keep on going up, so it has failed, right? So that one indicates shows us that we are some sort of bearish. So we can even see them trade up here to go and then go down, come retest this area and then shoot down. Now when it's consolidating, it will usually like come down and then come up, come down, come up, bruh. And you can, if you're not careful, you can take a lot of losses when you don't recognize faster what they're doing. We're forming another fair value gap here. Yo, this is just me passing passing, what do I call, passing time? How do you say it? Just having fun with the charts. So now we have that fair value gap, which is now an inverted fair value gap, and then we have this one here. So what I'm expecting to see is trade up here, maybe wick through, it's okay, and then take these lows at least. Yo, you have left me hanging. You can wick through, that's okay, and then shoot down here, maybe retest that fair value gap, and then come and take this low. Now today, there we go. So I'm expecting to see rejection to the downside, but these guys are really going up, and I think I should have left this thing here just to see how they're trading, how they're reacting towards that 5-minute fair value gap. Oof, baby. So this just I don't know, let's see, we still need that. I don't know, you know what, I don't think we do, but that is oh, look at what we have here. We did have this imbalance, which I'm not going to mark. So we do have like a small imbalance paired with this down candle. This is going to be an interesting area. So let me leave that there. Wow, look at that. That's beautiful. So in the future, maybe once we establish that we're having a bearish order flow on a lower time frame, maybe we can engage. But I don't have enough data for that. But I know it does happen. So for now, let's just stick with what we have. But that was quite interesting. And even here we can see mostly we're having a bullish order flow. See how we're rejecting from that sell. That right there could have been a sell. Once we enter, and then you cover either this high or this up candle right there. Because I want us to either come down here or go up there, and you can take advantage of that. But just know that that will bite into your win rate, right? It can, if that is not your system of trading. Bruh. Open, went up, came down. Beautiful. Remember, we talked about this yesterday, that this can be your strategy. When that new candle opens, when it goes up, you can anticipate that would be the fake move. Once it comes down to the open price, you take a sell immediately. And you can aim for 1:2 something. 1:2. In this case, this one would have given you, wow, that's a lot. Currently you'll be looking at 1.6. The potential so far has been 1:9, but 1:2, 80% off, and then you leave a runner if that's a model that you want to use. Getting resistance from that 5 from this candle here, getting support, which is paired with a small imbalance over there where those bodies are not touching. So yeah. What's gonna happen here, my guy? You still have to be very, very patient. This was a good setup actually to go down, but the setup happened like 6 minutes before the candle closed. So we would have loved to see this happen, but when this one happened, where we trade above, and then that low would have been our entry. But that is some of the things that we have to endure. Okay, now getting support from that old daily high, old weekly high, which is this level where here, right there, that one right there. So it's a good thing I marked. Now in this case, what I'm seeing with US100, I think I am favoring bullish for now. What would be the down candle that's been used? That right there is a propulsion, an inception order block, in my own opinion, because this down is inside of this one. This one is also arguably inside of this one, but this one, this is what I've marked up there. It's also an exception of the block, by the way. 5 minutes. By inception, I just mean that it's a down candle inside of this down candle here. They tend to have some sort of a, big rejection. Like, look what happened here. Once we traded into it, look at this push. That right there was, you believe it that will give you something. Your entry would have been right when we hit that open price, or maybe just up a little bit. And your stop loss can be below that candle or below whatever low that is there, and that would have given you like 1.78. If your stop loss was just up a little bit, it would have given at least 1:2. That's a whole another model that you can use, but for me, I just use it for analysis and things to see if to support price for me. Let's get rid of this today, because now it's going to 1. What I'm thinking is, if you've listened to my past streams, I usually talk about a volatility that happens at 12, right before 12, and then there's also another one that happens at right before 1. And what I understand from that, if I'm not mistaken, I had it from ICT, is the bond markets close at 1 p.m. PST, which is 3 p.m. PST. So there's going to be some sort of a volatility. So what I'm thinking is, if that volatility happens and it shoots to the downside, once it trades below this low and it gives us an entry, then we will enter, because normally it usually go one side and then go back inside the range and then trade the other way. Because I know that, because it has taken me out a couple of times where I'll have like an entry maybe here and my stop loss is kind of right there, and then we're going like one direction in this case, and if that volatility doesn't play in your favor, it will go the other way. So takes you out and then comes back and then now proceeds towards where your target was. Sometimes how it also happens is also it can play in your favor. Let's say I'm positioned right before 1 p.m. and my TP is like somewhere over here. Now that volatility can push price your way, and then it just turns around and takes you out. So that is something to be watchful of. Yesterday it worked in our favor, and it was one of those days where it can push up like it did yesterday and then keep pushing up. So for yesterday it was the push was going down and then kept on going down. So let's hope today is one of those days where that volatility will come down and then go up. So we'll be ready. Another thing is we are heading towards the premium, right? So we can also look for a short, right? We'll see what the volatility will do. So if we do go up and then come back inside this range, we are taking that sell. Now stop loss up here to see if that volatility, the aftermath will start going down. For now, that area has held as support, and I can say that US100 is now heading to these inefficiencies up here from what I'm seeing. So yep, there's no other inefficiency here, so this is a walk in the park right there, and then we do have another swing high there. We can get some resistance from this up candle, which is a supply right there, but will it hold? I don't think so. I think we're gonna trade up to here. So let's see if we've formed nothing. That down candle is forming support beautifully. This is a walk in the park. There's no inefficiency. So today seems like one of those days where we close the session with nothing, which not losing, not taking a trade is a win, right? The reason, the logic behind that is, the way I understood it is, let's say we take a trade today and we lose 1%, and then I take a trade tomorrow and I win 2%. The total is 1%, 2 minus 1. If I don't take a trade today and then tomorrow I win 2%, what's the total? 2%. So not losing is winning. Genius. Genius vibes. Genius vibes. Come on. Where else will you get such wisdom? Trader Mawera. And it's too hot for a brother. I have to. Now. Bruh, we didn't get any entry here. So what I'm seeing is that old daily high has supported price, and now we're shooting up. Great. We're not taking trades until one of them turn to red. The setting is right here. Show rated levels will turn to red. If I put like blue, it will turn to blue. See? Means that price traded above those ranges. So the setting I have them on is red. This is an indicator by, I think it's called 2 degrees. No. Who's the author of this indicator? Oh my god. It's by Sessions. It's not this one. Which one is it? It's by Assam Julian, right there. This guy is a genius. Thank you so much, Assam Julian. Your indicator is fire. I'm hungry. Sorry about that. Bruh, all these moves are happening without us. Oh. The cost of using rules. So I believe this is one of those days where impulse entries play out in your favor. But in the long run, you end up losing. So it's now like 10 minutes to 1. So anytime from now, we can see that volatility play out. But normally I usually see it like 5 minutes before 1. And there's a time it used to play out like anytime after 1 or up to 5 minutes after. So 1 to 105 is where you can see that strong push. The problem with that is it will go either up or down, but mostly what I've seen, if we were bullish, it will shoot towards that side, especially if it's coming from a strong area. Like see how like this one is bouncing off of this old daily high, then we are likely to see it go up. The thing is though, is we do have like, see how we have if this 5 minute closes, there we go. I think the volatility is right there. That's what I'm talking about. It's too early though. These guys are coming up here, but we had no way to participate. Oh my god. Woo, there we go. We were okay. Now I'm ready to take a trade because we've traded above this one and this one. I would have loved if we come at least to this 30-minute volume imbalance over here. So But look, US100 has gotten to that spot, which is good. I would have loved if we did come here and then come down, but it is what it is. So that volatility kind of happened, that injection happened at 1250. Are they done? I don't know. Otherwise, as of now, we are in a good area. If we do get we do create a low, I'm in, right? That low, I'm taking a sell. 1:2, and I'm out. But then again, I don't know. Yes, I like this 5 minute that they've left here. That 5 minute, whatever, I like that. So there can be a quick target. And then if we look at the 10 minute, we do have this down candle before we went up. I would have loved if we come to this volume imbalance and then reject from there. Otherwise, let me see, what am I missing? And now we are going down. We've traded to this up candle, to that wick, so that's okay. To shoot down. Am I missing something? We're now working that weekly EQ level, which is this one over here. This week, the half of it is where we are handling right now as we speak. Now, am I comfortable taking this trade? I don't know. But I like that we have this imbalance here, which can be used as in an inverted form. So that low right there can be our entry, which I will be taking because as per our rules, we do have an entry. But this candle has to close in the next 18 seconds. And my entry will look something like this if they take it right now. Now, this is going to be an issue though. That right there is going to be a big issue. Okay, so I'm taking this trade, create new order. This is a low probability, in my own opinion, but my rules do apply. 2760, 2760, sell, stop, boom. We're late, my guy. Okay, I'm in, and they've given me a very bad entry, but it can still work for us. So we pull up our trade management, whatever, as quick as we can to the original entry right there. This is the entry that they've given me because of slippage. And so once we get here, we reduce the risk by half. Beautiful. Look at that, my guys. Oof. So, oof. Rules are rules. It didn't look like it's gonna work for us, but it's currently working. So once we get to 1:1, we reduce the risk by half. And at this point, yes, my God, let's go. What are we going down to? 1:1 is right there. Let's go, let's go. Okay. We are currently in the money, and we've seen 1:2. Okay, let me put it right there where we have it. We've currently seen 1:0.5, and 1:2 is gonna be over here. We'll take 80% off with 0.76, and actually it's supposed to be from this low right there. That's kind of how we're supposed to do it, which is perfect actually. So right there at 1.7 is where we'll be taking out 80% of it. So let me have a buy limit right there, just ready to take profit. Will we get down here? Oh my God, that is not good. What is yeah, so this right here is, yeah, so let's see if this fair value gap can hold price to the downside. 1 minute, and then that up candle is our last line of defense. I'll mark it just for the sake. My guy, that is not good. But as I said, this was low probability. Can it still work? Yeah, 100%. What is 80% of 156 units? 0.8 times 156. We have 124.8. So let's do 125. Buy, my guy, buy limit, because we are selling. And what we're doing is we are taking 125 of the 156 units at that spot right there. Then after that, we'll have broken even, and we don't care what this market does. So if they want to go and reach in book 2 way down here, we're good. So for now, I would have loved to see us keep on going down, because after 1 p.m. wait, it's not yet 1 p.m. Whoa. US30 is really, US100 is really pushing up, and when this guy is pushing up like this, the rest tend to follow. Yeah, that 5-minute gap right there, I knew that would be an issue. Now this 5-minute is confirmed, right? So let's see if we can, push and trade below it. That would be nice. That would be really nice. And especially if we stay below a half of that 5-minute body. I know I'm doing too much, but it's all good. After this, we can go now to the 5-minute and just watch that price. But I would like us to remain below that half right there. It will be 5 EQ, right? How do you 5 EQ? We're back in the money. I can see 5 bearish order block EQ. I think that's how I have it marked, right? That's it. Now let's go watch this from the 1 minute. As long as we remain below this 5-minute level, then we do have hopes on this position working. If not, then this is the last defense that we have. That up candle and this fair value gap over here. Let me get rid of that. So this is the current position that we're in right there. And I want to get rid of this one so we can watch price. So let me see where we were, where we entered. No. Yeah, so this is where we were engaged on this trade. Guys, we're too bullish, so this is clearly low probability, but can it still work? Yup. Let's hide that. Let's see. Stop loss is right there to do its job, a total of 1%. That is the last level that we have. If that one is crossed, like they can, especially if they cross above that closing price over there of that up candle, they close up here, game over. Game over. Unless, I don't know, the 5 minutes is closing the next 27 seconds. If it does close below this level here that we just put, which is a half of this up candle, then high chances that we might see a decline to the downside. So we've come into this fair value gap, guys. If that's your entry, that right there would have been your entry, and you'd be looking at 0.9% as we speak. Oh, come on. Okay, so I believe that 5 minute has closed. Wait. Yes, it has closed below, so that's good. Now let's see if this one will also keep on going down further. It's now 1 p.m. So we've traded to that one. get rid of it. Good. We're currently in this one, and then we do have another up here. Bruh, what is this? Can we get another win? Do not mess our winning streak, man. We had a full week of wins last week. It was just, I didn't even realize it, but this was from last week when I was playing this account. Took it down to 212. Can you believe that? And then some more games, and then so last week was, oof, Jesus. This is from last week. Oh, how do I check the date? Last week was the 20th, right? You can see right there from the 20th. Where is it? Right there, 11:20. It was just like a win. 20th. Then we're looking at 21. We took a loss here, but we made it back and a little bit more. Win. This is just like, this was a mistake trade. This was a runner that was taken out. But and today is the 27th. So if we win today, it will be a 6-day winning streak. Yo, seems like we have a lot of noise in here. What do we need? What don't we need? Get rid of those executions. Stop loss is up here to do its job. Are we likely to? Man, US100 is too bullish, but I like how this one is, not playing along with that game. And this one is kind of in the middle. This one is still plowing up. If that's a word. I'm suspecting it wants to come up here. Remember, we also have this sweet spot, which is that 30-minute imbalance right here. But I would have loved us to come down. Are we likely to come all the way down here? I don't know. Seems like I'll have to leave this trade running. Looking at the 5-minute time frame, we have like 1 minute. If we do close again below that half of this up candle, a high probability is maybe we can see some move to the down. The problem is with this 5-minute fair value gap here. Yeah, this one's gonna be a hurdle to cross. It's currently offering support to go up. 4 minutes, 3 minutes, no fair value gap, no nothing. 2 minutes, we have this gap. I like that. Rejection. Doesn't mean that they can go up, because this could be much stronger than whatever you have there. Hey. Okay, now let's watch price. This guy's still going up. US100, what are you doing, my guy? Consolidation. We left with a fair value gap, but they've closed above it, so where did we take that trade? Yeah, we're still in the premium, and then it went immediately to the discount, but we should go down a little bit farther to get some steam to shoot up. The 5-minute candle, has it closed? 30 seconds to the closure. I still want you to close below this one. I mean, we can see that on the 1 minute. If this one closes again below that 5-minute half point, then we do have some hopes. So fair value gap, guys, if anybody entered using that fair value gap, which to me, I think it's kind of, I don't know, risky from what I've seen. Maybe their stop loss was at that high, then they've seen like 1.4 something. I used to take trades using these gaps, but now I use them to gauge if I can have another entry, or to see, what if they're supported, it shows me that it confirms me the order flow of the market. So right now I like how it came in and then came down directly. Immediately I thought that we'd keep on going down, but then it makes sense because we have this 5-minute fair value gap here. So this is what could be used to go up, because remember we had this original 5-minute, oh come on, 5 with the block coming down to shoot up. So we shot up, fair value gap to go up. Okay, so guys, I'm gonna take a small break. I'll be right back. Someone else is calling. I'll be right back, but everything is set. My TP is set at 1:2. The only thing I can do is maybe have an alert right there that'll tell me, hey, reduce, don't delete, reduce risk by half. So I can do it with my phone, whatever it will be. Reduce risk by half. And then once we get to 1.5, I can have another alert that'll let me know, hey, break even the position. Place whatever, break even. Break even. What should I tell it? Like put position at break even or whatever. Break even. Get the point, right? So whenever I am, I'll get that notification and I can adjust accordingly. And I think that's it. That's all we need. And I'm just gonna leave that there. I'll be right back. Are you guys still seeing my OBS in the first place? Yes, you are. Mic check. Okay, I'm back. Let's go. Okay, so I see we are back in the money. This 5 minute is still acting up. So US100 has gotten tired, and this guy, that's why I like US30 sometimes, because it just has a mind of its own. US500 is gonna be in between these two guys. But this one is going up, this one is coming down. US500 is just in the middle, like yo, trying to figure out who to follow. So you can see this is the all 5 minute time frames. US30 is printed, is kind of going down strongly. This one is done because remember again, it's after 1 p.m. So volatility kind of slows down. Now, this is, I feel like, would be the most best thing to do, because I think I should reduce this risk by half, like right now, because we are likely to keep on going up, in my opinion. But then again, let's just submit to what we have. Is this high probability? That 5 minute fair value gap right there, still, you know, acting as support. But then we have come once, we are coming again, especially after we've completely closed it. We should have just kept on going up. So why did they feel, why was there a need to come back again? Because now we shouldn't even have this level anymore, because we've traded down and up. So let's get rid of it. So as you can see, there's now no imbalance, and so this should have been a walk in the park again, but then we're going back up. So that is suspicious. Anyway, okay, just losing 1% of the account if we do lose. So I think I'm gonna end this stream here, or you know, just leave it running until the market closes, and I'll see you guys tomorrow. So I'm not gonna babysit this thing. I think that we can still see, you know, I can shoot to the downside easily. We do have that value gap over there. Let's see how that works. This one is dead, asleep. He is done for the day. Now, if we are to keep on going up, it makes sense for them to come down further and then shoot up. That is my own view. Otherwise, I feel like there's just too much noise. I'm going to get rid of this because those limits are already set. Now, if we do close this session, having not reached here, I'm gonna change this buy limit. I'll take it up to here at minus 1.5. I'll take 80% off right there. So that is one of the things that I'll be doing. And then the final TP is going to be, let me see. This is super tricky. Here's the next spot now. Let's get rid of this. There we go. These are those limits. Looking at the 5 minutes, guys, look at we're in the 10 minutes. You see that imbalance? We are likely to trade up there. That would have been a nice place if we did got like an entry coming from here. But for now, just follow our rules. And I like this. See how we forming like a channel going up. If we can break off that channel, that would be nice. And then we have this trend line from here to there. Anybody buying those trend lines, they are in the money. 1 touch, 2 touch, 3 touch, money, baby. I am not seeing anything, so let's just submit. Oh, hold up, what was I looking for? Okay, so this down candle here is where I'm thinking, this is the 10-minute. That down candle is where I'm thinking I can take TP right there on the 10-minute time frame. Let me see the 15-minute. I think that's what I'm going to do. Let me not be greedy, because let me just change that. Extend, because we're just about to end the session anyway. Go to the 10-minute time frame, and you can see this last down candle that was shot up. I think I want to take, of which again, it's okay, because this is that 1.5 level where I want to, if we close this session, having not gotten to where the original whatever was, TP, I'm gonna move it up here, which is good, which covers that zone over there. So we are sorted. We are sorted. Very much sorted. The question is, are we going to come down here? I don't know. I don't think I'm gonna stay here to find out. So let me just do it right now, and then I'm done. I'll leave this running, and then at 2 p.m. I'll end the stream. I want to get rid of some of these levels so we can have a cleaner chart. So let me do this. Extend that. Do we need to watch this side? Maybe. I don't think so. Whatever happens, happens. Anyway, I can just still have it there. That is the last line of defense. That is 1.5 over there. And we can get rid of this now. Let me see, what else can we clean? Clean that 5-minute up. This one stays because I still want us to remain below that zone. But the way we are staying there a lot, then we're staying in here a lot. So does it still count? I don't think so. But I still have it there. So the farthest we've seen in this trade was 0.3. So for now, that is where we're taking out something at 1.3, which is still a win. A win is a win. And where do we have the final TP? I don't have it. So let me work on where I want to see the final TP. I think I need those indicators. Maybe at the can we come all the way down here? Maybe at that 4-hour for the block right there, maybe. Or give it another try to see if we can come to retest this daily, or at this level here, just at this zone right here where we saw some support, and we shot up. If they do come down, then you can have that final TP over there. I'll be fine with that. And that's it. We're good now. We are good. The other thing I will do is, if the stop loss is hit, then I want to break even, and I want to come and remove this buy limit, because if they do take out my position, all these three come out, this one is left. So if they do come and hit that buy and then they keep on going down, we're gonna be in a loss. So that is something that we have to be watchful for. So I'm going to set an alert right there and tell that alert that to tell me oh come on, what is this? SL hit, close by limit position. Which in this case, it's acting as take profit. But once that stop loss is hit and it's still there, it's gonna be a buy order. And I think that's it. We've had quite an interesting session, but nothing that we know that according to my system showed up. So we stayed in the sidelines until this move right here showed up, and I still think that it's going to work out, honestly speaking. I think that high will be respected. But anyway, that's it for me. I'll leave this running until like 140 whatever, 45, and then I'll close the stream. Okay, I'll just have it on one window like that, and then maybe switch to the 5-minute time frame, and just, or should I leave it on the 1 minute? I feel like the 1 minute is too much. I feel like the 1 minute is too much information. I want to make this thing as minimal as possible, so get rid of that and get rid of some of these positions. First of all, let me group all this to today. My guy, okay, man. Hey, Jesus. Okay. Yeah, I think I'm also going to hide this for now. Just trying to make this as minimal as possible. What else? And also get rid of this monthly and weekly. Yeah, I think that's much better. Also get rid of that. Get rid of this. That's fun to watch now. Let's take it back to the 1 minute. Yeah, that's okay. Let's watch it like that. All right, so that was Trader Marina, and I'll see you. Wait a minute. No longer be right back. Awesome. I like that. So that was Trader Marina, and I'll see you again tomorrow. So thank you for watching. God bless you all. Keep on working on your skills, and in due time, they'll take you before kings. And pretty much that's it. This is a running position that I'll leave. If it takes me out, then we're ready to lose that 1%. It's already, and if it does come down, then we're talking 80% at 1:3 RR over there. And pretty much I'll leave this running until the market closure at 2 p.m. So we do have wait, I can't see my time anymore. We have like 28 minutes to go. So I'm out. Thank you so much, and I'll see you tomorrow.